My name's Calvin Waite, and I trade Bitcoin and cryptocurrency for a living. All right, you guys. Today we are going to research and do a deep dive into the stochastic RSI. So a lot of experts in crypto like to use the stochastic RSI. They like to say, hey, we're overbought, we're oversold, this is the direction we're headed. But the question really is has anybody done a test to see if the stochastic RSI is actually successful in predicting price movements? So for those that don't know what it is, the stochastic RSI is essentially a calculation made on the relative strength index. And the relative strength index generally just gives, it kind of trends direction of a certain asset. So the price will go up or down. The higher the stochastic RSI, the more strength and the more it's trending upward. And if it gets too high, a lot of people feel like, oh, we're too high, we're in for a reversal. So what they've done is they created a stochastic on the RSI, and I'm just on Investopedia. So they've created this calculation that goes from a scale of 0 to 100, and if you're above 80, you're overbought, below 20 is oversold. So the idea is that if you get above 80, up above this purple area here, you're looking to come back down, and the price is supposedly going to fall. And they like to give these nice examples. So here we are up in overbought land, we're going to fall. Here we are in oversold land, we're going to rise. So the idea is that you should be able to buy when we're oversold and sell when we're overbought. So here's the calculation. We take the RSI minus the minimum RSI in the last 14 periods, divided by the maximum RSI minus the minimum RSI in the 14-day period. So this is sort of a trailing number over 14 days. Not too complicated. So very easy to do. This is the stochastic RSI just put on, this is Bitcoin versus dollar. And all you have to do is go into your Pine editor. I've done all the work, and I've essentially created the calculation here. So I'm taking the RSI for the past 14 days based on close, and then the minimum RSI would be the lowest RSI in the last 14 days, and then the maximum RSI is the highest RSI in the past 14 days. And here, if you put it into the formula, multiply by 100, just so we have a range of 0 to 100, this gives us the stochastic RSI. Now, what's interesting is the blue number, this blue line and corresponding number. What they've done is they've done a simple moving average of the last 3 days because it's so volatile. So we smooth it once, and that gives us the blue line. And if you take the smoothed line and do another simple moving average and smooth it twice, that gives us this red number. So the blue crossing red, a lot of people look at this, but I kind of wanted to just take a step back approach. We're not going to trade every time it crisscrosses the blue or the red. We're just going to take it at face value and just determine whether, if we are overbought and we start to slide out, is this the right time to sell? And if we are oversold and we're starting to climb back out, is this a great time to buy? And maybe it works in certain assets. Let's just check and see if it works in crypto. So what I've done is I've created this buy and sell strategy so that we can check it and test it. And then at the end of the period, I'm just closing all trades just so we can get a profitability at the end. Okay, so I'm going to add this to my chart now. And this is what I've done. So now look at the last 4 years. I'm taking a 4-year cycle because while Bitcoin is sort of in a 4-year cycle, all other coins are generally in a 4-year cycle along with Bitcoin. And really it would work in any period. I mean, supposedly it should, right? If it's profitable. So now this is where it gets interesting. So now, let me move some of this stuff out of the way. We have a situation where, so this is Bitcoin. I'm just going to zoom out a decent amount so you can see some of these cases. So here we are overbought, so we sell. We get into oversold, and then we're starting to come out, so we buy. And you can kind of get an idea of how profitable we are. We bought up here, we sold down here. We bought down here, we sold here. So we made profit there, lost a little here, lost a little here, gained some here, gained some here, lost quite a bit here, gained quite a bit here. So what's the net result of this? So what I've done in my calculation is I've essentially tested to see in the past 4 years, the results are we would have 229% gain. So that means if we had $100, we would now have $329 because a 100% gain is a double, 200% gain is a triple. So we tripled our money. That's great. Closed trades 40, so we would have traded open and closed 40 times. And look at this number, 47.5% of the time we win. So when we are overbought and we move to oversold, if we make this trade, we are going to win 47.5% of the time, meaning we will lose more times than we will win. And another number is max drawdown. Drawdown is when you get into a bunch of losing trades. So like we lost here, we lost here. If this happens over and over, the worst case scenario in the past 4 years is that we lost 45% of our portfolio. That's a little rough because if you start with $1,000 and you're putting your $1,000 in and you lose 45% of your money, you need to almost double your money just to break even. Because if you lose 50%, you're only trading with 500 now, and in order to get back to 1,000, you've got a steep amount of climbing to get back to where you were. So I took this idea and I compared it to what the HODL gain is. It's a little hard to see. It's up here. So if you'd have just bought 4 years ago, you'd have had a 1,857% gain. So you're like, okay, well, that's Bitcoin. Bitcoin's different. Bitcoin doesn't count. So let's look at some other coins that we have 4 years of history on. So here's Ethereum. Ethereum's gain. So I'll just kind of zoom out so you can kind of see. You can really can't see very well. Not super great. But anyway, if you'd have just held 4 years ago, you would have gained 72%. The result of using this stochastic RSI, you'd have gained 9%. So you were worse off trading this in isolation. So I recognize that this is in isolation, but I actually want to test it in isolation. Like, how good is this indicator? Does it stand on its own? Is it really as useful as people think it is? I mean, if you combine it with something else, then your strategy is different than that. So 45% of the time we're profitable. Our max drawdown was 67%. Okay, let's look at another one. Let's look at Dash. Maybe I will zoom in a little bit, just so you can kind of see. So my HODL gain is a little high. Let me just make a quick change so we can see things a little bit easier. I used a calculation here just to place the gain on the screen. So there we go. Now we can see better. Okay, so here's a little bit better view. So here we are. See, that's what's interesting about this, is it's so sensitive that it thinks this is an oversold situation. And we came above and exited our 80% line. So according to the calculation, you should exit here. So that's the challenge here, is that if we were just eyeballing it, would we make that same choice? Well, in order to be consistent, you kind of need to take emotion out of the game. You need to be able to set some rules and be able to live by them. But yeah, we missed a huge run right here because it was sensitive and it popped back down below our line. So we hit oversold territory and we're out until we come back out of this and we buy. And then we never got to oversold until back up here. So this is pretty rough. So Dash, if we'd have just held, we would have lost 66.15%. By trading, we actually were better off. We only lost 49.77%, and our percentage is the same. So let me save you guys some time. I went ahead and pulled out about, let's see, I did this for 19 coins that we had 4 years worth of history. And so I'll pull that in right here for you. I'm going to stick it right at the bottom because I have totals underneath. So here's our Bitcoin. Here's our stochastic. So if we hold the coin, just buy it 4 years ago and hold on to it, what's the result? So some of these coins were great. Look at this: PivX, Mona, Digibyte, Verge. We have more Bitcoin by buying these with Bitcoin and holding on to these coins. So that's pretty good. I want more Bitcoin. That's the name of the game. Now our stochastic RSI, would we have more Bitcoin? We would in some cases. I put an X in the cases where it was not more profitable, and I put an O in places where we were better off with the stochastic RSI. And the interesting thing is, if you look at the stochastic, the situations where there is an O, more than half the time it's to reduce a loss. We would have lost money pretty seriously, but this took us out of the market for a period of time, and that actually helped us. The only kind of strange one is Digibyte. It managed to be much more beneficial, but you'll notice that the percentage of wins versus losses that we take is less than half. So if we're looking at the stochastic RSI and we think, oh, it's oversold and now it's coming down, we are wrong more than half the time. It's more likely to go up when it's oversold than it is to go down. And that is a revelation. The drawdowns are very painful. So maybe the RSI is profitable, but since we had so many bad trades in a row, we lost 90% of our portfolio. No wonder we can't pull back out of this. So there's something that we would have to do to modify this and make it profitable. But most of these experts that are pointing at the RSI, they're not telling you any more information about what their strategy is, that they're only investing a quarter of their portfolio and they're going to put another quarter in when the signal flashes again to avoid these large drawdowns. But in that case, you aren't investing 100% of your holdings, and you have the potential of losing more than 100% of your initial investment plan. Like you wanted to put in a certain amount and you end up re-putting in more and re-putting in more, you can potentially lose more than what you originally had slated for that coin. So there are a lot of risks that you need to be looking at in this case. So let me just give you the totals, and I've excluded the Bitcoin since Bitcoin is versus US dollar, and I'm just going to look at, were we better off? Do we have more Bitcoin by investing $1,000 in each of these and holding, or trying to trade and using the RSI? So, or the stochastic RSI. We would have had 156% of our Bitcoin 4 years ago. So, all the people that are holding are going to be way better off than trying to use the stochastic RSI indicator to make their trading decision. And how profitable are we? On average, we only made a winning trade 43.54% of the time, and our drawdown average was 84%. So when somebody starts getting all technical and getting all smart about, hey, I'm an expert and you should listen to what I'm saying, have they done the research? Because when they're throwing around stochastic RSI, I actually glaze over because it can be helpful with certain circumstances and with certain strategies, but at face value, it does not tell you anything. You actually need more information than this, and it actually may not be giving you the directional indication that you were expecting. So 37% of the time, you're better off using the stochastic RSI than you would without it. So that means that almost 2/3 of the time you're better off ignoring it. So I am a person that likes rules. I like to have an idea. I like to be able to test it, and I like to make sure that the indicators that I'm using make sense. I recognize that I'm talking about this in isolation, but what good is an indicator in my mind if it can't perform on a certain level without help from other sources? You just really need to take this with a grain of salt. I know that it has its place, and there are strategies that benefit from this, but Joe Schmo YouTuber on YouTube trying to impress you with their knowledge, and they start throwing around stochastic RSI, it may not be as helpful as you think it is. So I hope you learned something, and I hope that makes sense, and we will catch you on the next one. Hey, look at that. You made it through another video. If you appreciated anything I said, I would really like it if you could give me a thumbs up or subscribe to the channel. If I can grow the channel a little bit more, I'd love to start doing giveaways and make things a little bit more fun around here.